Hello folks, Brandon Chapman with you. It's another edition of the Monday Theo Night video for February 28th, 2022. And boy, this is the last day of February. And you think about January and February so far, you're thinking, wow, the S&P is down how much? Now, we did get a little bit of a stick save today towards the close. So currently we're down about 9% since the January high. So, this is kind of a big deal, right? It's not like we've been moving very smoothly to the upside. The January barometer would suggest we're lower prices. It's going to suggest we're going to have a difficult year to this year. And the title of today's session is: Are bears swiftly emerging? Are bears a swiftly emerging threat for stocks? And I think when we're talking about bears, obviously Russia, the Russian bear is one. But I think there's other bears that are emerging right now that are potentially more impactful in terms of future price activity for the S&P, and it's largely going to be negative. Now, if we look at kind of the sector performance thing, you'll notice energy topped the list, and real estate and financials brought up the tail end of the performance for today. Now, as we look at those specific sectors, did they rally? Yes, but they didn't quite finish quite as strongly. In fact, if you notice here today, there was a significant print, 5.3 million shares in XLF at 38.52. What does that tell you? That's basically where we closed in the session as well. Again, I don't care if it's a buy or a sell, it's a print. It's a level that we're using here, and we ended the day right at it. And so where do we go from here? Do we end up lower or higher? All we know is this is going to be a very significant price point in the coming days. And we're going to look at an XLF trade here in a second as we circle back to it. But again, where are things heading right now, right? We've got the bounce. Real estate today finished down about 1.7%. Real estate was one that we looked at. In fact, I did a blog post, even for people that are not members of TheoTrade could have read it, talking about ITB and housing stocks, and specifically Lennar. Back here, and they've got a huge downside move and then a sharp recovery the last couple of days. Have things materially changed? When we talk about bears, what we're talking about is the upcoming potential drift lower in terms of earnings expectations. Certainly you have stocks like today, like EPAM, and this is not unusual, right? For stocks declining 45%. We've had a number of companies that have had very, very difficult times in the earnings. And then what happens? They start to deteriorate and continue to sell off. In fact, a better example is Home Depot. Huge decline on its earnings. And again, what we're seeing is diminished expectations. And when you look here, it appears like they beat earnings, and yet what? The stock still declined significantly. And so as we think about other bears that are emerging, certainly earnings are one of those scenarios. And so when you think about companies that you're watching that are announcing earnings, and we'll get a couple of earnings announcements coming up here, there's a couple things to consider. Do they beat top and bottom? Meaning that, do they beat on earnings and revenue? Do they raise guidance? And finally, does the price actually go up, right? You want to see all three of those in place if you're considering buying it. And again, if they fail on the guidance, this is one that could cause serious heartburn for the company. In fact, Zoom today was announcing after the close. Let's just bring up ZM and quickly look at it. We bring it up on a 1 day, 1 minute here just to see the intraday trade. Stock went from 134, dropped as low as 116, 112 in the after hours trade. Okay, so there's a lot of potential risk right now. And sometimes you think about, well, they beat, the stock should go up. But no, in actuality, what's going to happen here is if they see a continued deterioration, the bearishness of a diminished outlook is more significant than if you beat recently. In fact, if you look at today's expected move for this week, rather, $26 or $27, again, $27 the downside, you're looking at what? The stock ending up down here. And we look after hours, again, going back to this, 112, we didn't even hit the expected move. There was about a 20% expected move for earnings this week based on the implied volatility. So these are things you have to consider, right? And as you're considering where the opportunities are, companies that are beating, that are raising guidance, et cetera, price going up are going to be significant. Otherwise, they're going to be susceptible to a bear attack. We're talking about earnings again, not Russia. Now, on the topic of Russia, though, Russia's seen significant downside activity in its share price. And again, my Trader by Your Side program, we talked about this back here as the stock decline. Hey, if there's attack, expect to see downside here. It's been huge downside in the Russian ETF. In fact, today, looking at some unusual option activity, you'll see some things kind of emerge just in a quick sifting through of the activity here, right? 8,900 April 15 puts. See some call sales in there as well. Go to 14 April. What do you see? 21,000 in the money puts, by the way, at the 15 strike price. Implied volatility is extremely high right now, but it just echoes selling calls, buying puts. It echoes this kind of bearish expectation. While it doesn't give you exactly a target price for the move in the stock, again, expect to see more pressure. Because if you missed the news over the weekend, what happened? Some Russian banks were removed from SWIFT. Again, the idea of being able to do like cross-border payments, it becomes much, much more difficult. And the lack of movement of financials today is actually kind of perplexing, given that. Is there any sort of counterparty risk? So the reality of the Fed tightening, and this is the other bear, the Fed tightening or expectations of tightening are going to create financial instability. What's going on in terms of SWIFT and maybe Russian sanctions, etc., may create further instability. And that's the other bear, right? The potential machinations or the Fed rate increases by the Federal Reserve, which may create downside pressure on the money supply, which will create and continue to create downward pressure on stocks. Okay, so while we've gotten a nice little rip here in the last couple of days, what we're seeing today is relatively an indecision day in the S&P 500. We'll see, do we break and go higher? There's things you can do to kind of measure the movement. You can go from high down to low here and say, okay, we're about almost a 61% retracement. We take out 44.10, 44.11. Maybe we have a shot at going back to 46, which was a very significant point from a couple of weeks ago. All right, so let's go back to XLF here. So when you think about some of the action or some of the activity today in the option market as an indication of expectations, this is what we're talking about, right? So we come down to option time and sales. And you'll see some stuff, and I may didn't catch all of it for today, but an 18 March 41 call, sold indication, right? There's a lot of kind of different activity. What we're going to center on here for XLF is a March expiration. Got to keep scrolling. And we're looking at some downside, 15,000 contracts. So look at the calls over here, expecting that to be closing activity since it's less than the open interest. As we look over here, what you see is that 15,000 against 9, right? 100. 15,000 against 400. What we're looking at is a downside put spread for 18 days out. We're looking for 34.50. So when you think about 34.50, that's not only just down at lows, that's breaking support here. Now, it's a relatively cheap trade. It's a trade that goes with the implied volatility. So if I come down here, implied volatility, you'll see that they're buying the 34%, selling the 41%. That makes it favorable. It makes it cheaper. And so again, it's a speculative trade. But if things go, where in a handbasket, again, if there's a bear attack, this might be a very real possibility. We might end up down here. And again, low risk, high reward, low probability trade. But again, to have a couple of these out there in case things go haywire is not a terrible decision to make. Conversely, you could take JP Morgan. I'm looking at Bank of America here. Bank of America has been down, back against support. We bounced nicely on Friday. We're down today, finishing the high of the session. But in today, it's the complete opposite in terms of its trade. It's a little bit longer in terms of expiration out in the April. But you'll notice out here, 39,000 contracts traded. Some of it probably rolled down here from the 50, 55 down to 47. Maybe even some of the 55s rolled down to the 50s. But again, the point being is interest building at the 47 strike price. And if you look at the time of sales today, again, is there anything really huge out here? Not exactly. But again, you look at the 14 April 50 call. And again, that's kind of that roll down effect here, buying the 50, also buying the 47. So what's the deal? Right? We have financials going one way and Bank of America going the other way. That just kind of shows the disagreement here, right? Is what happened over the weekend really, really bearish? Is a potential conflict with Russia bearish? Well, an attack, right? Death and destruction initially is, but over a course of things, wars are a means of creating inflation. The biggest threat or the biggest bear that could affect stocks is what? Reducing the money supply. And so when we think about reducing the money supply, what can help reduce that? If we engage in more federal government spending and the Fed continues engaging QE and doesn't raise rates as quickly. That's the silver lining of this, if you want to consider it a positive for the market. And so as a function, you have bearish and bullish trades today in financials and banking. And again, it creates an interesting scenario. Bullish trade in JPM, bearish trade in KRE, regional banking ETF, right? It actually finished higher today. Because why? If you look at the Treasury yield curve, TNX minus 1.47, FVX minus 1.64, TYX minus 1.14, all declining, and yet what? The 10-year and 5-year decline more than the 30-year. What you're seeing is a bigger spread. And if the Fed doesn't raise rates as quickly, right, does that benefit generally regional banks? It does, if they can steepen the yield curve, right? Inflation concerns are still on the table. So again, it's a very confusing point, and only time are going to kind of play this out. So again, are bears swiftly emerging threat for stocks? Yes, they are. They are a threat. The question is, does threat become reality and do stocks decline? That's probably more than likely. Now, Tesla today was the best performing stock in the S&P 500, up nearly 7.5%. And sometimes you can see this stuff kind of build in this weekly expiration. And for Tesla, huge activity, 87,000 contracts traded by the end of the day today at the 900 strike. Huge activity. 900's right here. We almost pushed there by the end of the day. So again, you can look at this kind of weekly activity and see some of the movement. Energy did well today. Well, guess what? ConocoPhillips broke out today on high volume. Well, what did oil do? Forward/CL. Oil was up about 4%, had the highest close we've seen in years. Okay, so back to ConocoPhillips. Today in ConocoPhillips, there was trade that was positive. It was for a weekly expiration, March 4, right here on the 95 strike. And it wasn't just Conoco, it was also Oxy. This is one that's frequently kind of traded when they're bullish on oil. Oxy today, it was the 42 call, 8,700 contracts against 4,900 interest. You see a lot of these, but Occidental up huge today. Okay? The energy trade is moving big. Why? I saw a headline by Josh Hawley calling for us to produce more oil. Why in the world would they produce more oil? All the policies are benefiting them to not produce. And not only that, they're keeping supplies low and prices are up. They're doing well. In fact, Exxon's probably the best it's been in the best financial position in years in terms of earnings and cash flows. There was a significant print back here. Okay. Another area, gold, right? So we've talked about gold a lot, right? GLD today finished up about 1%. And the trade on GLD today was the March expiration. So roll down here to March. And I'm going to scroll down here to get to the point. 39,000 contracts traded, mostly bought at the 18 March 195 strike. You're seeing continued upside interest. Hey, 45 cents. I'm going to lay it out there, low probability. But if things go, where, guess what? This might pay off. And gold might go up and financials might go down to get in different directions in the same day. It's a very real possibility as we're seeing today. XLF down 1.5%, gold up 1%. Does that trend continue? Again, positive on gold. The fact of the matter is, with yields coming down right now, that does benefit and provide some wind at the back at gold. Okay. Another area we looked at, of course, REITs like AGNC. Back here, for example, made a huge move to the downside. Resetting is an opportunity. But areas I've talked about in my sessions with my Trader by Your Side group, even mentioned it here, I believe, is agriculture. right? Nutrien up huge the last couple of days. This is one that's had significant option activity over the last several weeks. CF Industries is one back here. I believe we even talked about it in this session as well on the video. Okay, looking at agriculture, Intrepid Potash, right? Russia, Ukraine, good source of wheat. Wheat prices have gone up. In fact, they broke out last week, right? Guess what? Do we plant more? Is there going to be more need for what? For fertilizer, for seeds, etc. Mosaic breaking out big the last couple of days. So this is one I've been kind of on for really almost 2 months now, since we saw significant option activity back here in ADM, and then we saw it again here, and just propelling this stock forward. It broke out on Friday, kind of gapped down, rally today. So far, holding support at 77.50. So ag is a place to consider or to look. Another stock today that saw some option activity is Kroger. Now, Kroger, when you go back to Tyson was a company that had pretty good earnings, right? Pretty good guidance. They felt, hey, we're passing on these higher costs to consumers, and that was it, right? It was an exhaustion gap occurring late into the move, and we filled the gap, right? Well, guess what? Now we have Kroger. It's a grocery store coming up. Now, whether or not they can pass on higher food prices, higher costs to consumers, this is going to give us a read a little bit on the consumer. Now, you might make a decision about where things end up on the 2nd, that is Wednesday, because this announced earnings on March 3rd before the market opens. Now, if we look at Kroger here, what was today's trade? Well, if we look at option time and sales, you'll see a little bit here, 47.51, 47.51, 47.51. Interesting, right? Well, let's go to it. It's a 4 expiration, right? So we have nearly 5,000 contracts buying the 47, selling the 51. Again, these are not retail traders that are putting in a 1,000 contract order, by the way, for $1.20, right? These are institutional traders that are buying that upside expectation. Now, whether they're right or not, I don't know. But at least there's one opinion out here of somebody buying some upside call spreads with the potential to stock getting to 51. What's the likelihood of getting to 51, though? Well, the stock right now is near 47, and there's nearly a $4 expected move. So one standard deviation range would be approximately $4 above and below the current stock price. This is providing an indication of what? There's at least maybe some upside indication here for Kroger. Again, potentially to the upper expected move, which 51 certainly puts it in that expected move, one standard deviation range. Okay. Now, again, you might tighten this up a little bit. Is the vol extremely beneficial here? No. You might keep it a little tighter. You might do like an in-out, buy it in the money, sell out of the money. In fact, you'd probably keep it right here, bring the 47.50, 48.50, where the vol is a little closer here. Okay. Or even out here where it's a little bit flatter. 49, because that pushed it out towards the expected move. Another stock with earnings coming up here is I believe TPX this week. So TPX, actually they already had their earnings. Sorry, forgot. Had its earnings. So this is one that had the big gap here. Now, on a technical level, right? This isn't one you're really buying for the long term, thinking, oh, it's going to go back up again. But what happened yesterday or Friday, the stock actually closed above the high of the gap day here. We're having a bit of a pause day today. Late in the session, what we saw a bigger trade coming in. It's the last one we're going to review right now, but 12K was a March 35 strike right here. So not super far of the money, but $2 away for 18 days to expiration. And you look at when this kicked in, you can see, go to a 1 day, 1 minute right here. It was right around 12:30 my time. It's about an hour and a half before the market closed. And if we look at it on a 1 day, 1 minute here, what happened? Right about right here, you saw the volume kick in and the price began to shoot up and get back towards where the price was previously. Looks like a bigger kind of market on close print here. Won't worry about that one. 521,000 shares. Again, that's not going to be a big deal. But the point is, what you did see was buying come in. It propelled the stock towards the high of the day into the close of today's session. So again, what you might look for tomorrow is look for a little follow through here, right? And then we're talking about as a 35 strike, we might be able to push above and close the gap here to almost about $37. Anyway, folks, there's like almost limitless stuff we could talk about. Unfortunately, we don't have forever. So anyway, it's been a pleasure being with you. See you.